Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Rausen Pereira. State-owned Bank of Baroda, Vijaya Bank and Dena Bank will be merged to create the country's third-largest lender as part of efforts to revive credit growth and economic growth. Now, the move follows top lender State Bank of India last year merging with itself 5 of its subsidiary banks and taking over Bharatiya Mahila Bank, a niche state-run lender for women. Announcing the plan on Monday, Finance Minister Arun Jaitley said that the merger will make the bank stronger and sustainable as well as increase their lending ability. Giving the context of the merger, he said bank lending was becoming weak, hurting corporate sector investments. The government owns majority stakes in 21 lenders, which account for more than two-thirds of banking assets in the Asia's third biggest economy. But these PSU banks also account for the lion's share of bad loans or NPAs plaguing the sector and need crores of rupees in new capital in the next 2 years to meet global Basel III capital norms. On this edition of The Big Picture, we will take a closer look at mega banks, their need and implications. Joining me on the program today are Nitin Desai, former Chief Economic Advisor to the Government of India, Ajay Dua, former Secretary, Ministry of Commerce and Industry, and A.K. Bhattacharya, Editorial Director of the Business Standard. Thank you to all my guests for joining me on this edition of The Big Picture. Mr. Desai, I'd like to begin with you first. Your thoughts on the merger and why these three banks have been chosen to be clubbed together?
First, I think the merger has to happen. We frankly have too many banks in this country. Historically, our banking system evolved on a very regional basis. Many of the banks operated in different regions, but the country is getting much more integrated in terms of its market. So banks have to operate at a national level, and frankly, there are just too many banks to operate as national banks, and some merger is inevitable. These banks, I think, it's a fairly shrewd merger. The reason is they've taken two banks which are in reasonably healthy state, Bank of Baroda and Vijaya Bank. Vijaya Bank is very small. It basically operates in the south. Bank of Baroda and Dena Bank are basically started in, Bank of Baroda started in Gujarat. Sayaji Rao started it. Dena Bank actually started in Bombay. It was started by a man called Pranadal Devkaran Nanji. Incidentally, I had met him. He was a Bombay man, I had met him. And they were basically Western India banks. As you know, Dena Bank is not in a healthy state. It is under this what they call prompt corrective action category. So I think why I say it's shrewd is they've put together banks whose business can complement one another. For instance, Bank of Baroda is not that strong on SMEs and retail lending, whereas some of the others are. It does not have as much of a presence in South as Vijaya Bank does. And to a certain extent, Dena Bank and Bank of Baroda may have an overlap, but there you are putting a relatively sick bank along with a healthy one, and hopefully this will come together. So in my view, this is a reasonably shrewd merger. That is, they have put together banks which can complement one another. I think there is also a chief executive in Bank of Baroda who's come from outside the system. You know, he's a Citibank man who was brought in, reasonably young by public sector standards. So I hope that this works out. The important thing is to take the next step. Allow these people freedom to work. Do not have too much political interference in their functioning. Then there is real potential for these people to become as successful as some of our private banks have been. You see. So I'd say that this was very necessary. This had to be done, and on the face of it, looking at the numbers, this looks like a reasonably shrewd merger in terms of complementing capacities with of the different banks together.
Right. You know, Mr. Dua, you are someone who's always advocated that the bank management should be given more freedom really to look after the day-to-day affairs of the bank, and there should be as less political interference as possible, maybe none also is something that you've advocated. Do you see that happening, and do you believe that's the answer really to tackle this problem of NPAs?
Mere amalgamation of the banks is not going to ensure that. Let me just start by saying that I would prefer to use the word in today's discussion, amalgamation rather than merger, because this is not exactly the same type of merger as we have seen State Bank and the 5 subsidiaries and the Mahila Bank, everybody merging into one bank. Now it is 3 banks getting together and a 4th bank will emerge. We don't know what its name would be, whether the brand equity of these 3 would be preserved or not. All that we know is from the Finance Minister's assurance that the 85,000 staff which is there in the 3 banks would continue and their terms of conditions of service would not be made adverse. That was just a word of caution. Having said that, I would say that the NPAs issue to some extent can be addressed by this kind of mechanism, because the combined, the highest NPAs compared to their assets or liabilities, whatever you compare them, are the highest in Dena Bank, then the BOB and the
Vijaya Bank. Yeah.
Vijaya Bank. By merging the 3, the government, or if provided the banks approve it, technically now the 3 bank boards have to decide and work out the terms and conditions and the time framework for merger. The government would be absolved of the responsibility of putting as much equity infusion which was expected to take place if these 3 banks had been kept alive. So to that extent, there would be less burden on the society, on the taxpayer. Second, they're combined, the government, the point which Dr. Desai made, I would also call it a shrewd merger, because if you look at the capital adequacy ratio and compare it to the Basel III norms which all the banks are supposed to comply with within 2 years from now, this is doing, the amalgamated entity is doing well. It's about 12.5% compared to the requirement of 10.865%.
Right.
So again, to that extent, the bank remains healthy. One bank's assets or others probably have, meaning the number of banks comes down to 19 for the government, but that by itself is not going to be solving the problem of NPAs going forward. It's a question of capitalization, requirement, Basel III norms, adequacy ratios, etc. That would only come about if in the insolvency proceedings which take place, that there is some competition possible from the buyers. Otherwise, 1 or 2 persons come forward, buy the assets, and the banks, rather in their urge to clean their balance sheets, say, all right, we agree. Like we've seen a large business house acquiring an asset at 4% of the debt.
Right.
So by itself, this does not absolve the bank's larger entity of how to deal with the NPAs. But going forward, I hope they will be far more careful in lending than they have been in the past.
Sure.
And we've had a discussion here earlier also on Raghuram Rajan's finding, other observations, etc., that there was a fair amount of enthusiasm, call it irrational exuberance, as he called it in lending, etc. The good banking, prudent banking would require all such things get curbed.
All right. Mr. Bhattacharya, I'm going to go back to a point that Mr. Dua was making about how 3 banks will now come together to create a 4th bank. Now, if you go by what the government has said as well, it says that these 3 banks will continue to work independently. Then why merge them in the first place?
Well, that's why I agree with the previous 2 panelists that it is a very shrewd move. It's a shrewd move, and as Mr. Dua very correctly explained, that it is not a merger. It is a clear amalgamation wherein the 3 existing banks will actually be dissolved and a 4th entity will be born. And that new 4th entity will be called something of a new name. You could call it the Bank of Bharat or Bank of something, but essentially once the boards of these 3 companies meet with the government being the majority shareholder in all the 3 banks, it will be easy for them to sort of ram it through, and you essentially dissolve these 3 companies and create a new bank. Now, the reason why it is not a merger and why it is an amalgamation, my understanding is this, that it is to counter the problems that normally arise when you organize such mergers which are from above. A merger from a business necessity is something, take for example, Kotak Mahindra Bank merging in itself ING Vysya Bank. It is a business necessity. You see each other and recognize that there are complementarities and you decide on that. But what has happened here is that the chief shareholder of all the three banks think for whatever good or bad reasons that these need to be made into one entity. The best thing is to destroy their existing entities altogether and create a new bank by amalgamation. Now that seems to be the reason why it has not been merged but amalgamated and create a new bank, so to say, and it is a bigger bank, third largest bank and all that. And I also see that this is to be seen in the larger context of the government's 4 Rs in the banking sector. The government began with recognition of bad assets, which is the ongoing process. Then it moved on to the resolution of the banking assets, which is the insolvency in the bankruptcy code. The third one was recapitalization that happened last year, in October 24, 2017, with 2.11 lakh crore of rupees being assured, out of which 1.35 crore has already been given. So the first 3 Rs have been more or less been done partially or fully. The 4th R was reform, and probably you are seeing the first indication that some reform will happen, because if you do not consolidate these 3 banks into one reasonably strong bank, then how do you make sure that the limited capital that you have at your disposal, how do you pump that capital into which bank? Which bank will be worthy enough to receive that and make it into full use for increasing lending and giving a boost to economic activities.
Right.
So therefore you need a stronger bank to absorb that.
Right.
Now the big question that is not yet been answered is, and which is my view is a bit slightly complicated, is that the assurance that nothing will be done to the employees for the next at least 1 year. Now that to my mind is going to cost the new entity dearly, because they've got around 85,000 people. Now, if you have one entity, now clearly there is need for manpower rationalization,
Right.
and the advantages and the benefits that you can have from this kind of an amalgamation will be greatly neutralized if you do not achieve simultaneous manpower rationalization, work procedure rationalization. So
Sure.
these are all challenges which the new entity will have to face. But as I said, that this would have been even shrewder move if it had been done probably not in a year which everybody is calling an election season,
Right.
where it is likely to face stiff political resistance from trade unions. Trade unions are already saying that we will oppose it.
Yeah, right. Dr. Desai, let's talk about, this being, I read an Economic Times report which said that top executives of Dena Bank, Vijaya Bank and the Bank of Baroda were kept in the dark as far as this particular news is concerned. Should the executives, the top management, have been informed about what's happening?
Well, basically, the owner has decided to do something and has now informed the people who run the banks for them that this is what they want. Yes, I think it should have been, but as somebody said, this is really at the moment what you have is an amalgamation of balance sheets. And as Mr. Bhattacharya was correctly pointing out, really, if you want this to work, that will have to go beyond that in terms of genuinely creating a bank which is coherent, a fourth bank which is coherent. So for instance, you talked about rationalization and stuff. What about rationalization of branches? You'll almost certainly end up with more branches than the combined bank would need, the fourth bank would need. How are you going to handle that? Quite apart from the fact that generally the role of branches in banking is itself being under question because of so much is taking place online now. So I'd say that the challenge will be in terms of how this is going to be managed. I'm told they've talked of about 6 months as the transition
4
period.
to 6 months is what they're
Well,
saying.
I think
yes.
that's very optimistic. That is very optimistic. I think something like this, where you really create a new entity, which is, and remember this, The SBI merger was slightly different.
Yeah.
In a sense, what you were merging with the banks which were virtually like, connected in some way with the SBI. Here are three banks which previously were never connected. Now you're going to bring them together.
They were competing with each other.
And they were competing. And certainly two of them were very much in the same territory also. But of course, the other, Dena Bank is very small compared to Bank of Baroda. So that probably doesn't matter. So I'd say that I'm glad that the first move to merge banks, to combine them, has come in this form with these three banks, because I think this has a chance of working because of the synergies, because there are many others which are pending. There are many other banks which will need to be brought together. But still, the 19 is still much too large, for a country. Look at any other country. Countries with much bigger economies than ours have far fewer national level banks. So I'd say there's still a lot of work to be done. So I'd say to the government, make sure you do not interfere in how this is done. And this is where the point being made by Mr. Bhattacharya, that why did you do this now? You should have done it 1 year earlier or 1 year later. Because now you will get caught up in the political arithmetic of elections. Also the point which Mr. Dua made, this in itself, amalgamating balance sheets does not solve the NPA problem.
Right.
It simply makes it look better.
Right.
Okay? Because you're taking somebody with 11% NPAs and merging with somebody with 4 or with 5, it comes down. Okay, that looks nice.
It's a good start, but more needs to be done.
This
really.
is only the beginning.
Yeah.
This is only the beginning. There's a lot of work ahead, and I would love to see how they are going to do it.
Right. Mr. Dua, does this give us a cue, this amalgamation, I'm going to use your word, give us a cue as to what might happen in the near future, what kind of banks? There are other PSBs, some doing very badly as well. How they're going to be brought together, because the government has been talking about consolidation for a while now.
Indeed. Consolidation is a must for all the reasons which have been very valid reasons put forward. The fact of the matter is the government has to be ready to see effective amalgamation resulting in certain branches having to be closed down, because there will be duplication. Certainly two banks operating in the same region, maybe somewhere a third as well. The moment you see so many branches being reduced, and that is the experience of even the state bank merging and the subsidiaries merging, because there were triplication, duplication, etc. The All India Bank Employees Union anticipates that. If you read their statements today, that you start with rationalizing the branches, then it will be rationalization of staff, and the huge staff which all the headquarters have of these banks or the regional offices have, those will also undergo a fair amount of rationalization. So having said that for a year we won't do it, I can see election compulsions, and or call it election or compulsions to deal with the labor, but going forward that cannot remain as a solution. The consolidation could take any form going forward. Here there were two strong banks. In order to absorb a third without having the impact the waste the subsidiaries of State Bank had on the State Bank suddenly in 200 years, as the unions themselves have pointed out, for the first year in 200 years it experienced a net loss in the year ending. They don't want that kind of a thing to happen, that only 5 small banks added on to one good one. Maybe in some cases it will be similar. In certain other cases going forward, the arrangement may have to be separate. I don't even rule out that some banks could be, post the election, could be put on the block and said private sector come and take them.
Do you see that happening, Mr. Bhattacharya? Privatization really of some of these stressed
going
banks?
Forward.
Going forward.
Yeah.
Going forward after the elections, maybe is that the way forward? Privatization of these public sector banks. Really,
well, we have talked about privatization of public sector banks for many years, but I think privatization of public sector banks will raise two issues. One is that the government's willingness to give up control over the majority control over a banking unit, and number two, if it does so, who does it sell it to? So there are two big challenges that any government will have to face one internal challenge, the second is external challenge. Now the government decided to sell Air India, it didn't find a buyer. Now has the government decided to reduce its majority shareholding to a minority shareholding and allow a strategic new buyer to come in? Now who will be that person?
LIC is always there.
LIC is there, but you know how many bailouts will you expect LIC to do?
That's true.
So therefore, privatization, to my mind, in current situation, is probably not a solution that we can look forward to. What we can do look forward to is more consolidation, but that consolidation will have to await cleaning up of the books. Now, there's one complaint that one may have with this current consolidation is this, that we have achieved this consolidation without cleaning up the books of Dena Bank. The stock market is here today where the Dena Bank stocks have just hit through the roof because
but BOB stocks are doing badly.
have gone down because they realize that they are better banks. Now they have to take the load of a bad bank. So the markets have sensed it very correctly. So therefore, a good consolidation without unduly harming the investors' interest. Please remember, all the three banks are listed.
Mr. Bhattacharya, talking about good consolidation.
Yeah.
How many banks do you think in an ideal situation do we need?
Well, there is no clear number. There is no clear number to this. But what I can say is this, that one is that if you need to consolidate more banks, first clean them up.
Right.
And if you think that you cannot clean them back, make them narrow banks.
Right.
Now you have got three big banks in West Bengal, UCO, United Bank of India and Allahabad Bank. What do you do with them? Who do you marry those banks with? Any bank who marries with any of these three banks will actually drown himself.
Right.
Now, so that's a big challenge going forward.
Right. Right. Yes, Dr.
I think
Desai.
the point is raised that here you were lucky that you had one big, relatively healthy bank who you could turn to for merger. Not too many left. There are not too many other healthy characters left to take over the others. To answer your question partially, way I would see it, to do a little bit of speculative thinking, that if we can consolidate initially into we have now four or five major banks, and then keep the others and say, okay, now you guys fight for the others. And see what, if you are interested, if there is some synergy or whatever it is. Incidentally, I also want to mention one thing. We've talked of public sector banks. Are we sure that we have sort of the number of private sector banks is right? I mean, we really have a very large number of private sector banks also now. Isn't some consolidation there going to take place? Because there are a few big people we near of, but there are also a lot of small private sector banks, which are now in the business. So I'd say that there's a lot of work ahead, and it's a combination of letting the market work, allowing privatization on the lines which are being suggested, the government using its ownership powers to amalgamate sensibly and shrewdly, as they've done in this case, to say 4 or 5 and then allow the others. But the most important is still management control.
Right.
That you cannot make this work in a market economy unless you liberate the banks from political interference. And one more thing, longer term tenure for senior management.
Talking about senior management, Mr. Dua, 21 PSBs as we stand right now, that number could be 19 in the next 6 months. Do we have adequate managerial power to turn these banks around really?
I'm not too pessimistic about that. Probably within the banking sector, whether it's drawing from the private sector, which has grown well in the last couple of decades, from there, or even within the nationalized PSBs, we could perhaps find people who can deliver. The banking bureau, which has been set up, and it has helped, track some people who from the private sector into the public sector banks, including the Bank of Baroda CEO, about whom we mentioned earlier. What is required is giving them operational freedom, not necessarily, because even the best of persons you get from anywhere, if you do not allow that person to report, to operate, we keep multiple accountability, summon him every day to Delhi from whichever part of the country the headquarter might be, and even a joint secretary insisting that I will only talk to the CMD, not to his number 2 or number 3. And there are incidents galore about such, saying that the joint secretary saying I don't meet anybody else other than the CMD. That kind of a thing, I think, has to stop. And I go back to one of my favorite recommendations, that please let the Reserve Bank of India regulate them rather than the Department of Financial Services or the Ministry of Finance. Department of Financial Services certainly had a role to perform when the banks were being nationalized. That time things had to be, various things had to be balanced, but no longer. Whatever little powers Reserve Bank thinks it doesn't have today on taking action against, private public sector bank chief executives and boards, etc. Examine those carefully. If there is validity, please give it. But do not try and have double accountability of these people, and do not make them run from one place to the other so frequently.
Right. Closing comment from you, Mr. Bhattacharya. A robust banking sector is something that we are all looking toward, is something that we are all aspiring for. But how do we achieve that, especially now in an election year? What needs to be done this year? And do you see something significant being done this year, do you think?
For the current year, don't do any more damage, because this is an election year. So therefore, it is safer for the country's economy and the financial system that the public sector banking remains as immune to political interferences and political interventions. But I will repeat what Mr. Dua said, that the problem with public sector banking is that its governance structure and its regulatory structure, there is not enough clarity on how it is monitored. Now, in the governance structure, the Department of Financial Services actually decide on what needs to be done on the question of who is the kind of director who comes, whereas in the regulatory structure, the RBI doesn't have adequate powers to decide on what kind of action that can be taken against an errant director or an errant CEO. So therefore, you need to look at the Banking Regulation Act very closely and amend those provisions as the RBI Governor Urjit Patel has detailed very elaborately. So I think that's a clear agenda which is either this year or next year, when the new government comes, must take it upon itself to amend the Banking Regulation Act to make sure that the public sector banks' regulatory authority is adequately empowered. And finally, it is important that the process of reform in the banking sector must start with gradual dilution of government equity in the banking sector, as Yashwant Sinha in 1999 or 2000 had proposed that why not reduce, like the Narasimhan Committee had recommended, reduce the government equity from 51% to 33%, but let that be treated as a government bank.
Sure.
But the government equity will come down to 33%. So this is a good way of starting that how the government interference can be limited by the shareholding, which is capped at 33%.
All right. Yes.
One more quick addition. Abolish the Department of Financial Services.
Absolutely.
That's
I would endorse it.
I'm saying
All
that
right.
very clearly.
All right. On that note, then, we'll call it a wrap on this edition of The Big Picture. Thank you to all my guests for joining me on the program and putting things into perspective for us. That's it on this edition of The Big Picture. See you again next time.